Welcome to The Alternative Investor. Well, cryptocurrencies have long piqued the interest of investors, but at the same time, there have also been concerns around security issues, storage, etc. At the same time, investors are also dealing with volatility issues. So I spoke to Gaurav Nair, who is the co-founder of Jaltech, which is an alternative investment company, about his initial thoughts around cryptocurrencies when they first launched, but also talking to us about the company Jaltech that is launching its first South African regulated crypto investment. Have a listen.
Initially, I didn't realize how big it would be, and that it sounded a bit like something a bit difficult to understand and a bit of a phase that people were going through. But as I looked into more, I realized, as a lot of people are realizing, that the technology underlying cryptocurrencies is amazing, and it can do a lot of things that our traditional financial system can't do. And so that's why you see this interest in the assets and people coming in and buying into it.
But at the same time, as we have this interest in this asset, there's also fears and people not really understanding what cryptocurrencies actually are. How do we get around that?
Yeah, so that's a great point. While the technology is amazing and can do wonderful things, it's totally different from the financial world and assets we're used to. It has a lot of risks that people are not used to dealing with. You have to take care of the cryptocurrencies yourself, for example, and if you're hacked, or if you lose your private key, which is this new concept that you don't have in the normal financial system, then you lose the money that you invested there forever. You can't just click forgot password and get it back. And so there's new skills needed. People need to do a lot of research. For companies and financial institutions that want to invest in this asset class, they need to build up new systems and processes. And for a lot of people, their day job is not alternative investments like mine. So they don't have the time necessarily to build all of that up. And it's also unregulated, which means that people often rely on financial advisors to give them advice, to do the research for them, to have these skills, etc. But because it's unregulated, financial advisors often can't or won't advise on it. And while a lot of people who are in the crypto space, they enjoy that there's no regulation, the thing is, regulations give investors peace of mind, and it actually encourages people to invest. So what's really needed is some kind of traditional interface for crypto assets, so that people don't need the skills themselves, and they can access it in the way they're used to accessing the normal financial system.
It's so interesting, though, because some people say, the irony of cryptocurrencies, that when we initially were thinking about them, we were imagining this new finance paradigm where there is no intermediary in order for us to be able to engage with the cryptocurrency and the Bitcoin. But now, as more people become more interested in cryptocurrencies, we suddenly have institutions, Goldman Sachs or whichever asset management company out there, being the intermediary for us to be able to engage with this. Like, it's quite interesting, right?
Yeah, that's right. I mean, for us, it's a new technology. I have no doubt that in five years' time, everyone will have the skills and systems and processes. Also, the companies that are offering crypto services out there will have built better user interfaces. The user interfaces aren't great right now. And we'll all get to enjoy direct access, unintermediated service, etc. All the promises of cryptocurrency. But right now, these things exist. Intermediaries exist for a reason. It's because they have expertise that we don't necessarily have, and they can do the research for us and the due diligence for us. And until we get to that world, for now, that's how we're used to accessing financial services. And so during this transition period, I definitely see a big role for intermediaries to provide us with advice and skills that we don't necessarily have.
So let's talk about your crypto notes. I mean, how do investors, get involved? How does it work?
Sure. So talking about this unregulated space, and as I said, I think regulation encourages investment. We wanted to try and provide a regulated investment for people. And until the Financial Services Conduct Authority, or FSCA, provides those regulations, which we are eagerly anticipating, what we did is we actually created a public company, and that has increased accountability. And then it produces these notes, and these notes can be sold through financial advisors. The note technically is a debenture, which is just an unsecured debt, but this is a type of investment that financial advisors have a category of license. They can advise on it. Obviously, because the exposure underlying the note are cryptocurrencies, the financial advisor would do well to make sure that they have a working knowledge of how cryptocurrencies work. So this now allows people and companies, etc., to get in through a traditional interface. We have 3 notes, so investors can invest in one or a combination of the 3. One is a Bitcoin note, which gives people who invest into it exposure to Bitcoin. The second is an Ether note, which gives people exposure to Ether. And the third provides a diversified index. So for investors who are looking for diversified exposure, it's the top cryptocurrencies, but selected by cryptocurrencies that have at least a bit of a history of liquidity, of safety, of security, and it has a minimum level of diversification across a few different cryptocurrencies.
Right. Who is this, note intended for from a risk point of view? Is it somebody who has a high risk tolerance, or is it somebody who is interested in cryptocurrencies, or how does it? Who are you exactly targeting here?
So we're targeting individuals, companies, and financial institutions. And some people, they have a need for liquidity, so they need to get their money out on short notice. They might have purchases coming up. And so for someone who needs liquidity, this is not appropriate. But if someone is willing to allocate a portion of their portfolio, it tends to be a small portion because it's so volatile, and is in it for the long run, then this is quite appropriate for them. And the reason that liquidity features is that, as we know, these cryptocurrencies are very volatile. They go up and down often. And you don't want to be in a position as an investor where you're forced to sell your cryptocurrencies when the market is down, and realize losses. You need to be able to stay in for the long run and enjoy the upward trend.
What's the minimum investment here?
The minimum investment is 10,000 Rand. And we offer 1-day liquidity on any business day. So what that means is that if you want your money back, and you call on a business day, we can then provide you with your cash back within 1 day. And quite importantly, behind the scenes, we've built up all the expertise I've been talking to you about. So we have professional traders who do the execution and make sure we get best prices. We have institutional grade custody to keep the cryptocurrencies safe. So we've taken on that burden of the skills and systems and processes on behalf of the investors.
All right. Gaurav, before I let you go, if we want to monitor how this particular note is performing, when would be the best time to check in with you again on the performance of this note?
So these notes, they track the price of Bitcoin, Ether, or the index directly. So it's quite easy to just check those prices. They are just meant to provide all the professional services, etc., and make it easy for investors and give them peace of mind, but still get the same underlying exposure.
Well, that was Gaurav Nair, who is the co-founder of Jaltech.